Stop me if you've heard this one before. Hawaii is banning Airbnb. Short-term rentals are dead. Sell everything and run for the hills. If you've been reading the headlines, you probably think the Hawaii real estate market is in the middle of a full-blown apocalypse. You might be picturing investors weeping openly in the streets of Waikiki. But here's the thing about headlines. They're designed to sell clicks, not condos. I'm Jason Wong, principal broker at Island Dragonfly. And today, we are cutting through the hysteria, the rumors, and the my cousin's neighbor's attorney said nonsense. We are doing a deep dive into what is actually happening with Hawaii's short-term rental ban, specifically Senate Bill 2919 and the county crackdowns, and answering the million-dollar question, is this the end of the road, or is it the buying opportunity of the decade? Spoiler alert, chaos is a ladder. Let's climb it. First, let's address the apocalypse in the room. Why is everyone freaking out? It comes down to Senate Bill 2919, now Act 17, signed in May 2024. This was the state giving the counties, Maui, Oahu, Kauai, Big Island, a loaded weapon. It explicitly gave them the power to phase out short-term rentals in residential and agricultural zones. And Maui, they didn't hesitate to pull the trigger. We're talking about Bill 9, which targets the Minatoya List, those 7,000 plus apartment-zoned condos that have been operating legally for decades. The plan? Phase them out. West Maui by 2029, the rest by 2031. If you own one of those units, yes, that feels like an apocalypse. Your asset just got put on a ticking clock. On Oahu, we had Ordinance 22-7, which tried to turn the 30-day minimum rental rule into a 90-day minimum. That would have crushed the midterm rental market. So, the panic, it's real. The legislation is aggressive, but and this is a huge but. Here's what the panic sellers aren't looking at. Number one, the courts are watching. On Oahu, a federal judge, Judge Watson, slapped an injunction on that 90-day rule. He blocked it. Why? Because you can't just take away property rights overnight without a fight. So, for now, on Oahu, the 30-day minimum effectively stands for many non-resort areas if you play by the rules. The 90-day apocalypse was cancelled due to lack of interest from the Constitution. Number two, the timeline. Maui's phase-out isn't happening next Tuesday. We are looking at 2029 and 2031. That is years of rental income still on the table. And do you really think these billionaire associations are going to go down without a lawsuit? There is a high probability this gets tied up in court for years. Number three, the scarcity effect. This is Basic Economics 101. If the government successfully deletes 7,000 vacation rentals from the market, what happens to the units that remain legal? The hotel-zoned units, the resort-zoned properties in Ko'olina and Waikiki? Their competition just vanished. Supply crashes, demand stays high. What happens to prices and nightly rates for the survivors? They skyrocket. So, where is the money right now? The flight to safety. Smart investors are dumping risky, gray area properties and moving capital into designated resort zones. These are the castles with the moats around them. They are insulated from the bans. You pay a premium, but you sleep at night. The contrarian bet, we are seeing prices drop on those Minatoya List condos in Maui. Some are down 20-25%. If you have a high risk tolerance, you could buy at a discount cash flow for the next 4 or 5 years and bet on the lawsuits overturning the ban. If the ban gets struck down, you just bought a gold mine for pennies on the dollar. That is not investment advice. That is high stakes poker, but people are doing it. The midterm pivot. On Oahu, the 30-day rental is still a powerful tool. Traveling nurses, remote workers, people renovating their homes, they need housing for 30 to 60 days. That market is less volatile than the nightly tourist grind and has zero TAT, transient accommodations tax, liability if you book over 180 days. Here is the bottom line. The amateur era of buy a house, throw it on Airbnb and get rich is over. Hawaii is effectively closing the door on the side hustle investor. But for the professional investor, the one who understands zoning, follows the legislation, and buys the right asset class, the opportunities are better than ever because the herd is scared. Don't follow the herd. They usually run off a cliff. I'm Jason Wong. If you want to navigate these laws without getting a migraine, let's connect and find you a property that's legal, profitable, and apocalypse proof. Aloha.